Keith Neumeyer, thanks so much for joining us on Wall Street Unplugged.
Well, Frank, yeah, it's been a while.
I know, right? I mean, we spent lots of time together. Good friend. Every time I go to Vancouver, we hang out. You always share tequila with me because you're the best tequila ever, which is awesome in your office, which is great. But, over the years, I just found it amazing because you've been doing this for pretty close 3 decades, if not longer. And you're always smart with your companies where, if you saw demand coming down, you always knew exactly when to cut, what to do ahead of time. I feel like your company may be better positioned right now because what we're seeing in silver is this explosion. And I think what people, listeners, want to know is someone that just, lives and breathes this industry. What's going on with silver? From my perspective, I see that, gold's taking off. I feel like this has lagged gold the whole time. And even now, even the move past $22 an ounce, you're not really hearing people talk about it on CNBC. It's not a big deal. People talking more about SPACs and everything, but what's going on in this industry that has you so excited? Because it seems like, the tailwinds, I've never seen them greater for gold and silver, but silver hasn't really participated, but it's definitely starting now, right?
Well, it is. It's very nice to see. I'm staring at my screen today, and I'm just, the last couple of days, I'm in a little bit of awe. I think I've got to keep pinching myself to make sure I'm awake because, I've been a staunch bull for the last 18 years and the run from $5 to $50 back in, from 2002 to 2011, I was right. I called it. And I think I was off by a couple of years, but I still hit the price. And, but I didn't predict the fact that the metal was going to drop the way it did so substantially. It got all the way down to, $13 an ounce, which shocked a lot of people, including myself. And, for a metal that is so critical in our life, everything that we do, including this call, every waking moment, even when we're sleeping, silver's working behind the scenes in all the gadgets and that we use, and electric cars, solar panels, cell phones, computers, you name it. Every gadget we have requires silver, and for the ratio to get so far out of whack, the ratio between gold and silver, which is somewhere around 90 to 1 right now. It got all the way up to about 125 to 1 in March, during the big sell-off on the major U.S. markets. And that was pretty crazy time. And I actually took advantage of that big dip in the price. But, really, if you want to look at the true price, what metal should be trading, just a couple of things. When gold was trading at these levels last time in 2010, 2011, silver was $40 an ounce. Today we're at 22. So just based on gold, I think there's a lot of room there. But I think there's even more fundamentals to drive silver much higher than even 40 is the mining ratio. We're only mining, for every 1 ounce of gold worldwide, we're only mining 8 ounces of silver, which suggests that this ratio, that the price of this metal needs to get much closer to the actual mining ratio.
So, Keith, talk about the fundamentals of this, because I know, talking to you over the past 10 years, the silver industry, you said, has been in a 500 million ounce physical deficit. But I think it was early last month, you were talking about delivery through the roof. Explain that to the non-silver investor, because it was something that you said, and if I remember seeing that video correctly, you said it's something that you've never seen before. But talk about the delivery and demand you're seeing out there.
Well, we had an enormous demand spike. I think that what happened with the U.S. stock markets pushed a lot of people into precious metals and helped drive gold. But what was happening with the COVID situation, mines were shutting down worldwide. We had 50% of the world's silver supply come offline and stayed offline for a good 60 days or so. And the buyers kept buying, so you saw these spreads explode between what the actual price was on the COMEX to actually what the physical metal was trading for. Silver was dramatic. Gold was also pretty dramatic. It was about $100 an ounce. Silver is still today trading at $3 to $5 an ounce above spot. It got up to about $5 to $7 above spot in March, and these are numbers I haven't seen before.
So what you've been, when people hear you talk about gold, you brought up a good point, right? Which is where gold was trading last time, silver was trading over $4 an ounce, right? Last time we had this market. People see you go out there and you say, listen, based on fundamentals, and you go over the numbers, and we're not even talking about the government and what they're doing with dollars and just inflating the markets. And I don't think anyone sees that stopping anytime soon for many years. But you throw out a number $100, and I can see people saying, well, maybe he's talking his book or it's that. But when you look at the fundamentals, you really think that this could get over $100? And if so, how long would do you think it would take for that to happen? Because the tailwinds to me, I've seen in silver and also gold have never been greater in at least 20, probably over 30 years. You might even say even longer, I would think.
Well, the central banks started buying gold, I don't know, 3-4 years ago. And then the central banks around the planet have been, substantial buyers of the physical metal. And obviously there's something up. They must know that this whole financial system is cracking, before our eyes. And, the federal banks around the world, not just the U.S. Fed, but all the federal banks are printing like crazy, trying to support their markets, try to support their economies. And they have the demographics against them, where you've got, 3% of, with the workforce going to be retiring over the next 20 years. And so, what's that going to do to the world economy, real estate prices and everything else? And, so of course, the feds are trying to, prevent this, recession that has to happen, but they're preventing it, as much as possible. But eventually it's just, the whole thing's just going to disintegrate. And, a lot of the big money, has been coming into the gold market with the governments coming in first. That should have been the telegraph to, the big institutions around the world that, hey, if the feds are buying, we federal governments are buying, we better be in there buying too. But, of course they're late so now they're coming into this market, driving it higher. But, when it comes to silver prices, which is more of a commodity, gold is a currency. Gold is the granddaddy of all currency, and it should be in everyone's portfolio, regardless of what is happening in the public, markets. It's irrelevant. It should always be part of your core holding. Silver is a little bit different, much more speculative, much more driven by world economic conditions, but also it is dragged along, sometimes a little bit kicking and screaming, when it comes to, silver price moving. But it is looked like as a cheap man's gold, and is attracting a lot of investors. But I like it for the fundamentals, because, we're trying to electrify this planet, in new ways. We're trying to get off oil and gas. We're trying, fuel cells, electric cars, batteries, all the electronics that we want to own and continually purchase. Much of the planet is still but much further behind the Western economies. They want to also own cell phones and computers and everything else, so that and also electrify their countries, with new technologies. And so, this is not going backwards. This ball is turning, and we need a lot more silver than what we're currently mining as an industry to supply the needs of the human race over the next couple of decades. And in order to supply the amount of silver that we require to achieve what we want to achieve, we need triple-digit silver just to afford to get some of these smaller, lower-grade assets into production.
All right, let's talk about that too. Let's talk about, first Majestic now, right? You just came out with your quarterly numbers, I think around a week ago, which were very, very good considering you only had partial production, right? A lot of these mines, Mexico was shut down, COVID, long, gold mines around the world as well. But now that opened up, I look at your, pretty sure it's 3 producing mines that you have, right? In the world's largest silver producing country. But when I look at your all-in costs, for 2 of those mines, around $8,850. I think the other one's around $1,275. We're at 22 right now. It seems like you're perfectly positioned for this. I mean, so I guess let's talk about your company and those 3 projects, because you have more projects as well. And you kind of, it's a good segue, because I was going to say, what's the growth model? And it seems like, your other, I think it's 5 projects, and where silver is right now and going higher, it seems like, these could come online even quicker.
Yeah, the last 5 or 6 years in the mining sector has been quite a challenge. The margins have been quite low. Only back in 2014, 2015, we had pretty low metal prices, and it was a real struggle. And so we ended up, we had 7 mines. In 2017, we had actually 7 mines operating. over the next couple of years. And the last one got shut down in mid 2019 to give us the three biggest mines that are currently operating. And they were our most profitable mines. And, it just made economic sense to focus our investment dollars on the more profitable operations. And unfortunately, the other smaller, more highly costing operations, we ended up deciding to shut down, which is obviously a tough decision, but we did do it, and we're looking at actually reopening a couple of them. So, maybe a year from now, we'll have a couple of these other ones reopened, because the metal prices are obviously doing pretty good, and they would we'd think they'd be profitable at these current metal prices. So there's definitely some growth there. But I built this business through M&A. I put the company together 18 years ago, and we probably bought 10 mines or 10 companies over that period of time, and we've always got our eyes on looking for ways of growing. We're going to produce about 24 million ounces of silver equivalent this year, 60% in the form of silver, 40% in the form of gold out of the three mines. We're investing quite a lot of money in those. Two of the operations are getting a lot of capital for expansion. So two of the mines, the San Dimas mine and the Santa Elena mine, should start to see increased production in 2021 and 2022. So we've got lots of internal organic growth coming over the next couple of years, but there's potential that something external might occur as well.
So talk about, I think this gets overlooked by management teams. And one of the things I loved about you from having so much experience in the industry is when things are bad, I think you really see the separation between good management teams and terrible ones and inexperienced ones where they're very late to cut costs. They think everything's going to be okay. You would never like that. But could you talk about, when I say you're perfectly positioned, because cutting costs, and you've become more lean than ever with this company at a time where prices are rising and now you're benefiting tremendously. How much of a difference does that make in terms of margins? Because I just feel like sometimes that's overlooked, that you go through this whole period. The people who survive and come out to the next bull market are usually 10 times stronger. We saw it in 2000 with technology companies. There's a reason why they had the best balance sheets in the world. A lot of these companies almost went out of business and they survived and they're stronger than ever. But talk about that process. And has it made you leaner and stronger as a company going through that and better positioned now that, we definitely say we're in a bull market in silver?
Yeah. I'm glad you brought that up, Frank. I've been in the business for 35 years. I've seen, several gut-wrenching bear markets that have, just destroyed company after company. And, fortunately, I've surrounded myself with the, very top-notch management teams that, can look ahead and see what the business looks like in multiple different types of environments. And, mining is a very cyclical industry, and investors need to know that. And I said earlier, it's very much of a boom and bust business. So if you're able to survive through those weak periods, which we've been able to do with First Majestic, as you're dead on. You come out of these bear markets very, very strong, and we've done it through, quite honestly, the use of technology. I'm a big advocate of technology. I've been pushing technology on the mining sector for over a decade. Many people that run mining companies, they're part of an old school, that old thinking. They don't like technology. They don't like to take risks by adopting new ways of doing things. And I'm quite different. I'm much of a more financial guy than an engineer or geologist may be. And I look at economics more than anything. And it's important to me to always work to try to drive down costs. It's sometimes challenging. You've got increasing costs for labor. You got potentially increasing costs in energy. Those two costs alone generate most of our costs. So if you could, and those costs generally you don't have a lot of control over, but the costs you do, and that comes into your processing costs and your recovery of metals out of the material that you're pulling out of these mines. And we spend and continually spend tens of millions of dollars a year on adopting new ways of doing things and driving down costs. And just one comment before I shut up. Over the last 5 years, or 6 years, we actually have reduced our cost by 50%.
Wow, it's an incredible number. Yeah, it's an incredible number that I'm sure a lot of people don't talk about and don't understand. They say, hey, prices are good. Last time this happened, you're a much different company compared to the last bull market as well. But one of the things that I really admired about you and watching you, at least, I would say pretty close to a decade since I've known you now, is when when you look to purchase companies, M&A, you're very particular. It's, you don't settle. You really love to buy assets that are dirt cheap and building up your current base, which I loved in how you created your companies in the past. The M&A market right now, with silver prices higher, are you still seeing opportunities to build it that way? Is it your growth plans maybe looking at M&A, or is, hey, you know what, we're sitting with a great portfolio and let's get those other 5 mines ramping? I've even spent, like you said, you spent a lot on CapEx. Talk a little bit about that and maybe the M&A market in silver.
Yeah, well, first internally, I think I covered it a little bit, but we can in an environment like this, we can increase exploration. Exploration is the cheapest way of adding ounces to the portfolio, and with mills already there, actively running, it makes a lot of sense just to go drill some more holes and expand exploration budgets. So that's step one. Step two is obviously expanding. As you develop more ounces through successful drilling programs, then you can increase the throughput at the mills, increasing your production and also, generally speaking, driving down your costs. So, that's an important part of running any mining business. On the M&A front, I'm one of the most patient guys there is out there. I've got my eyes on several, assets and have for, the last decade. And I work, closely behind the scenes and planting seeds. And I continually work on how, am I going to, what's the next move that we're going to make, to expand this business even larger than it currently is. But it always takes two to tango. You never know when these deals actually happen. But, I never stop working on M&A.
Before we go, why don't you talk about the short position in silver, which we've seen, jump up tremendously, and now looks like you're seeing a bit of short covering.
There has been a fairly large short position on the miners, not just First Majestic, but mining stocks generally have had a pretty large short position on them going back a couple of years, and it hasn't really been unwound until just recently. And if for specifically on First Majestic, as of a couple of weeks ago, we had close to 18% of the issued and outstanding shares short, and it turned out it's somewhere around 40 million shares short. So that's a pretty darn large short position that is completely now underwater, and the stock today is looking crazy, and yesterday and last time we had a short covering rally, going back to 2016, it was pretty exciting. And back then, the company was, half the size it is today. We're producing way more metal. We're much larger, much healthier company, strong balance sheet, and with metal prices doing what they're doing and going a lot higher. I think it's going to be pretty hard on some of these shorts.
Even sticking to that topic, talking about the shorts, which I find is interesting, is we knew that during the bear market, where even companies that came out with good news, whether it's good drilling results or whatever, production results, it was used as a liquidity event for people to dump to just sell, right? Because there's just so much margin out there. But even now, are you still seeing the short positions build up? I mean, you just talked about yours being covered and resulting in a short squeeze. I would think right now with the market conditions and so many favorable things compared to 2-3 years ago that it'd be pretty crazy taking short positions in gold stocks. And some gold stocks, some of them deserve short positions, but guys like you are producers and been around for a while. Just that's kind of surprising to me. You're still seeing that.
Yeah, look, the data is always delayed by, I think it's one monthly data we get. And so I won't see, the new short data coming out for, I think, a couple of weeks. I actually don't know the date it comes out. My internal guys give it to me whenever it comes out. But nevertheless, it'll be interesting to see. I'm sure there has to have been short covering in our stock over the last couple of days, just based on how it's performing. But there's a view, there has been a view out there that the place to be is in the U.S. equity markets, and there's been a huge flow of money that's gone into the U.S. equity markets over the last 3, 4, 5 years, and it's done very well. There's a lot of people who've made a lot of money, and so they've they short one side, they short the energies, or they short the miners, and they go long the tech stocks or whatever the case may be. I look at this market very similar to what happened in 2000 to 2002. When we saw the Nasdaq peak out in March of 2000 at 5,000 points, and it crashed 80% over the next 3 years. And it was 2002 that was the beginning of the bull run in the resource sector that went 10 years. It ended in the end of 2011, so it almost went for a full 10-year bull market. You remember that, and it was pretty fun. The stocks like First Majestic did extremely well over that 10-year period. And I think we've already entered into another major bull market. I think this bull market that we're currently in started in 2016. And I think if it goes 10 years, or even if it goes 5 years, we're still in early days.
Yeah, no, it definitely makes sense. It is interesting. It's a great comparison to 2002. It's just we would see stocks fall tremendously, except when you have our Fed spending 30% of GDP to hold this stuff up and more money coming. But it is interesting. We're not seeing the market come down because of that, but we are starting to see metal prices rise and silver and gold stocks rise. So, Keith, I really appreciate you coming on short notice. I mean, it's so relevant now. Nobody's really talking about silver in America right now, which is surprising to me. They're just little stories here and there. I think it's going to blow up pretty soon as its price continues to go higher. And I love getting the scoop from you early on. And and thanks so much. Great to see success. And I know my subscribers are happy too.
Well, thanks, Frank, and good chatting with you again. And look, if any of your listeners want to, track me down, I'm on Twitter, just Keith_Neumeyer. Go to First Majestic's website, firstmajestic.com. Look at the company's PowerPoint presentation. There's lots of good information there. And any of your listeners want to look at a gold company, I'm also the chairman of a company called First Mining Gold. Go have a look at that, and I think it's a small up-and-coming gold company that people should be looking at as well.
All right. Sounds great, Keith. Thanks so much for joining us, and I'll talk to you soon, bud.
Okay. Thanks, Frank.